Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. What if I told you next could be $5,000 gold and $100 silver? It's not out of the realm of impossibility, especially as a recession is looming and these markets find a bottom. We could see a huge rally, a huge historical opportunity to take advantage of. So this article from Seeking Alpha is talking about gold is not a value investment anymore, but can go to $5,000 easily. So with that said, smash the like button. Subscribe because I post daily videos. Let's jump into this article. So, as gold mining costs are closer to $1,000 than to the current gold price level, investing in gold doesn't offer a margin of safety at the moment. However, given the current and future loose monetary and fiscal policies, I would not be surprised to see gold at $5,000 in the next decade. Now, it actually can be a lot sooner than that. I mean, in the last 30 years, we've seen $50 silver twice. I mean, think about that. In the last 40 years, we've seen silver $50 twice. So in a decade, a lot can happen, especially with the 2020 presidential election. The recession is basically here now, and things getting much worse. Further, if you keep a fixed exposure to gold within your portfolio, the rebalancing and gold's volatility can create a yield for you. Even if gold will probably go to $5,000 one day, I argue that there are better alternatives that will give you inflationary hedge and much more. So, that is an opinionated statement that I definitely don't agree with all the way, but I do like hearing different angles, different arguments, different sides of the coin, no pun intended, because that's how you stay open-minded and that's how you can create more opportunity. So GLD, or gold, is often mentioned as an essential part of one's portfolio. However, I would argue that investing in gold should depend on the strategy an investor has and whether such an asset will help him to reach his or her goals or not. That's true because silver and gold are a much slower paced market. It's not like stock markets that have high volatility that's going up and down and left and right. Silver and gold move much slower. And a lot of people, depending upon your exit strategy, depending upon your buying time frame, your financial situation, how much patience you have, that is going to depend upon whether or not precious metals are for you. Now, I definitely think they can fit anyone's portfolio, and there's definitely benefits to it, but some people just have weaker hands and just aren't ready. And if they do get into it, they're probably going to end up losing money because they will sell themselves short. So, gold price. Can gold go to $5,000? Let's start the discussion about gold investing by discussing the price of gold. The price, not the value, as with other investments, is key as gold doesn't pay dividends. If you have an ounce, it will always be an ounce, and therefore it is all about the price and how it moves. There's the intrinsic value that gold has to offer. An ounce of silver and gold will always have an ounce of silver and gold in it, regardless of spot price, because the real value is within the metal itself. That gives a huge advantage upon, with precious metals upon regards or other than other assets. So gold is not a perfect hedge and certainly not against stock market crashes. But you see gold opposing stock markets so much. When stock markets are highly volatile, gold and silver go up. If stock markets are setting record-breaking highs, gold and silver usually go down. And by the way, when I say gold, I'm talking about silver as well, because these are they're related. When gold is silver's big brother, so when gold moves, silver does the same, basically a couple of days or a couple of weeks, a couple of months afterwards. So when I'm talking about gold, I'm also talking about silver. A common misconception is that gold is a perfect hedge and that it will protect you from whatever happens in the markets. Now, that's not true. It's a misconception, but there is its advantages against that. Gold is a safe haven asset because of its intrinsic value, because 1 ounce of silver will always have 1 ounce of silver inside of it. So when there is economic turmoil, precious metals are the top priority. Many were surprised to see gold prices fall alongside stocks since the coronavirus crash started. And you can see the gold colors gold and stock markets are blue. So, unfortunately, gold isn't a hedge against market drops. Gold is more of a hedge against loose monetary policy and inflation. And that is so vital to understand, that gold is a hedge against inflation as we're heading into a recession, as the dollar is weakening, as inflation rates rise, as hyperinflation is basically destroying the economy. So, when it became clear that the Fed will not be able to maintain interest rates at 2.5%. Because such rates were hurting the economy, gold started its jump from around $1,300 to $1,700 in 2019. You can see right here, if we take a long-term look, gold prices exploded during the inflation period in the 1970s. During the 2000s, when it became clear that interest rates will remain lower than it was the case historically after 2009, when central banks pushed rates to 0% and pumped trillions into the system. And you can see right here, they're talking about in 2009, 2008, 2009, credit crash from, that was from the credit, but that we didn't have COVID-19 also playing along with this as well. So that's something to think about. So as in 2019, the Fed started lowering interest rates, and in September further increasing liquidity of the repo market and therefore increasing its balance sheet again, the blue line, gold prices explode again. So, here we go. This is the chart they're talking about right here. And then, see, gold explodes again. So, gold price, balance sheet, and here we go. So, given gold is down due to liquidity, issues not because of fundamental issues, it might be a good time to look at it again. Something similar happened twice in 2008, which I was just talking about, where gold prices fell significantly for a short period of time despite the doom and gloom environment. So, if the FDB, I'm not going to read all those, but if they all lower interest rates and print money, it is logical that gold, a relatively limited asset, goes up in price. Therefore, gold is a hedge against inflation, loose monetary and fiscal policy, and I would not be surprised to see gold at $5,000 in the next coming decade. So are you patient enough to see this? Do you have the patience? Or are you in it for the shorter term? Are you not waiting a decade to capitalize off your profits? I'm definitely not selling for another 15, 20, 30 years. I'm only 27 years old. I have a lot of time ahead of me to be patient. Some people, though, are on the shorter end of the scale, and they're trying to get out of this in the next 2, 3, 4 years. So maybe precious metals aren't the investment for you. Maybe you're looking to get out of your mortgages and do whatever, and you're not in it for a decade or longer. So you don't really have time. You don't have the patience for gold to rise. So however, just because gold can and might go up to $5,000, it doesn't mean it's the best possible investment out there, which I was kind of just talking about. If central banks print more money, lower interest rates, and governments increase their deficits, other asset classes might do much better than gold. Let's see how gold fits your portfolio as an investment. What kind of investment category you can put your gold into. So that's what I'm kind of talking about. So gold as an investment, no dividend, but you can make one. So we all know Buffett's view on gold, how it doesn't produce anything. There is no utility in it, no dividend, no growth, no earnings, no reinvesting, and therefore no compounding. Plus, there is a cost to owning it. So that's true to some extent, but you're leaving out a lot of context, which that's the part I don't like. All components crucial for long-term investing, as Buffett explained in the 2019 letter to shareholders. So he's looking more towards things that can give you compounding interest, that grow over time. Gold is basically your peg to spot price, and if it goes up, it goes up. If it goes down, it gold down. So gold with a dividend. So let's get into this stuff because this is interesting. So there's always a way how you can make gold have a yield for your portfolio. Gold can give you a yield if you rebalance it on its volatility. Ray Dalio, who is a proponent of having gold in your portfolio, discusses how you can set a fixed exposure and keep gold a fixed hedge against your portfolio. So let's say you put 10% of your portfolio into gold. Then when it goes up to 1,300, 1,700, you can rebalance, bring it back down to the balance back down to 10% again. When you hold gold, when gold goes down, you increase your positions back to 10%. So you're almost using like the gold to silver ratio, how you can exchange gold for silver or silver for gold, vice versa, one for another. As the ratios fluctuate, as there's volatility, you can earn free gold or free silver. Saying you can almost do that with gold and silver as well compared to the dollar. So I thought this stuff was interesting. It's definitely some stuff that I wanted to talk about because the potential for $5,000 gold is definitely possible. I'm not saying that gold's going to be $5,000 tomorrow and silver's not going to be $100 tomorrow. It's going to take some time, but with everything given, the circumstances and given all the situation that we have right now, it's definitely more plausible than not to see $5,000 gold, $100 silver coming sooner than later. Now, Like, again, I'm not a silver pumper. I'm not going to mislead my audience. I don't want you to think that tomorrow night silver is going to be $100, because more than likely prices are going to keep going downwards right now, as gold to silver ratio is 120 plus. It's going to keep, gold looks like it's outperforming silver, but that's only for the short term. That's not saying that it's going to keep doing that. But I am curious, what is your perspective on markets right now? Where do you think prices are going to be heading as things get more severe? Do you think a recession's looming? Where do you think this is going to put gold and silver's prices in the near term? And what do you think stock markets are going to be doing as well? Do you think that stock markets should be affecting the price of precious metals, correlating the prices together? Or do you think there should be separate markets and they can kind of have their own categories as prices rise and fall and fluctuate? What do you think? I'm curious to hear your thoughts on this. I thought this was a great article. I wanted to share with you guys. Make sure to smash the like button. I also posted 2 videos a day, so if you want to tune into those, it'll be in the top left hand and the top right hand corner if you didn't already see those. I highly recommend it. It's talking a lot more about COVID-19, about everything that's going on with silver prices, where they're headed, what's going on in the markets, and this was more of a looking forwards video to see where prices could be in the next decade or so. So anyways, I appreciate you for tuning in this video. Like I said before, the link to this article will be in the description. Make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.